Good morning, all. CamelbackTrading.org coming to you this Thursday morning, September 17th. We're looking at the last bunch of days of the SPY ETF market profile here on Window Trader. And speaking of Window Trader, any member now of CamelbackTrading.org gets a 15% discount if they sign up after joining as a member of my room if they buy the Window Trader Light or Blue version. So I'll have a button on my website soon enough, but if you want it prior to that, just contact windowtrader.com. Now, a lot to talk about this morning. I really want to get into what happened yesterday, what's happening today. I'm going to try to keep it as short as possible, so I probably won't even go over the charts. Now, and I do this because I know a lot of you, and I know the people who watch this regularly, and I really appreciate it. If you do like what I do, please hit the like button. Please give me comments. If you don't like what I do, once in a while I get a dislike. Well, tell me why, right? This is all free information, and nobody's going to be more transparent than me, and as I try to help experienced and inexperienced traders out there. So let's start with what happened yesterday, the good that the bulls did, right? ES had poor highs on both the 15th and last week's high. Well, they repaired both of those yesterday when they took them out. One in D period, one after when the Fed was speaking. The other good thing they did is they stopped the one-time framing down in the weekly when we took out last week's high. But that might have opened up a door that could be more sinister now for them if this selling continues and we close below last week's low. Now, again, I'm not calling for that, but that's something we have to always now have in the back of our mind. Right? Balance rules. And balance rules are very, very powerful. Right? And in this scenario, we stretched the top of a balance, failed, came back in, and now, ultimately, the destination is the bottom of the balance, which right now is 331, last week's low. We said the reference points and destinations are far apart, right? So that's exactly what's transpiring here as sellers and algos are searching for a level. Well, my pre-market low right now is 333.35. The 50-day moving average is 333.25, right? I said all this in last night's video. Look at the headline of last night's video, what I said. Now, this is what I want to go over, which is very important. So yesterday when we did take out last week's high in J and K, and both times came back inside of it, a trader in my room said, well, is that a look above and fail? I said, that, to me, is way too early to say that. He's still answering questions, right? The Fed chief is still answering questions. They're going all over the place. That is certainly not enough market-generated information to say, hey, we got above last week's high in J, K, and fail. If you take a short here, that's great. But for my money's worth, that's still plain innovative. Now, I know we're day traders, but there are swing traders out there. But even for day traders, I said, and I said this before it happened, I told him, because we were trading up here, I said, for me, I would like to see us take out today's low, which was C's low at the time. So 340.30 or whatnot, around that level. I said, if you take that out and get accepted below, that to me gives me a lot more market-generated information that we looked above last week's high and failed. And a lot of people would say, well, that's well, you missed the whole trade already. Last week's high is 342.50. We'll round it out. And C's low is 340.50. Well, I missed $2 already. That's missing the forest for the trees. Because first of all, you had a lot more market-generated information in M period. Even though the single prints got filled, right? We tried to get back into C's range and failed. And I made some really nice shorts. I actually had a long to fill the singles, and then I had a couple of nice shorts below C. That's number one. Number two, you might have missed $2 from last week's high to C's low. But if you really want to be a swing trader, or even a day trader that decides to go home with a position, which I do not, well, look at your risk reward this morning. You might have missed $2, but if C's low is 340.50 and we trade as low as 333.50, that's a $7 gain versus missing $2. That's more than a 3-to-1 gain. with a lot more market-generated information backing that trade. Now, did I call for it to gap low? Of course not. And by the way, this is only our first downside gap of the month here on the 17th. We only had one all last month. But I did say, if sellers do show up, there's not much below us to the 331 level. So did I expect it to be gapping lower here by $4 or $5? No. Am I surprised though? Well, I shouldn't say, did I call it? No. Am I surprised? Definitely not. That is pure market generated information, especially on the quote unquote little bit of a longer time frame, where you get a lot more market generated information, because you're not sure here, but below here you're getting a lot more market generated information. And especially if you wanted to go home, I said C's low is going to be crucial last night in last night's video, right? That's the price spike. Well, we're not even anywhere near it. Plus the price probe is being firmly accepted. I hope that kind of helps paint the picture, especially for the newer traders, right? Look at our destinations on the downside. We had yesterday's low, gone. We had the 14th low, gone. And then I didn't have anything until the 50-day moving average, which we bounced off the first time, and then the 11th low, which is last week's low. Algos are going to seek their level. Okay? Now, quickly destinations. So on the upside right now, 338.52. That's yesterday's low to fill the gap. So right now it's over a 400 tick gap. That's fairly wide. Then we have 339.73, which is our overnight high. And I take that back. We have the price probe first of 339.26, then the overnight high of 339.73, and then 340.31, which was the price spike. For the downside, we don't have anything right now until, again, we'll use the 50-day moving average. We have 333.35 pre-market low, and then a 50-day moving average is right there, 333.25, and then 331 weekly low, and filling the gap at 300.06, a 94-point gap from the 5th. And then, if we're to do that, then things get very dicey for the bulls. You have a daily low of 327.86, and then those two very important gaps, 327.73 monthly low, filling the monthly gap at 327.23, and then 327.73 monthly low, and then filling the weekly gap at 326.63. If you take out that monthly low, then you would stop the one-time framing up in the monthly, and boy, would you be firmly inside of February's range, right? These balance rules are very, very important. Pre-market volume right now is 1 million with a little over an hour to go. Now, so what's the game plan for this morning? Well, again, you can have people screaming gap rules apply. There's no way I want to be taking a put right away or going short on a 400 tick gap. That's number one. On the flip side, I certainly don't want to be long down here either just yet. Will they stop $1 lower at the 50-day moving average? Possibly, right? Because for my money's worth, this is still just short-term traders, right? We'll get an idea if the intermediate time frame or the longer time frame comes in based on if we get a trend day, based on if we get heavy volume. But for now, right, because we trade against the short-term algos and short-term day traders, I'm putting on, in my head, at least to start, that's who we're dealing against. So they have to find a level. I don't want to be a buyer right here. I don't want to be a seller. Would I buy it at the 50-day moving average? Again, it's all context. If we were to drive down there in the first time frame, I possibly would take it just to see if we get an initial bounce off it. But however, if that happens in B period and we're one time framing down, or C period and we have single prints, that context goes out the window, and I don't want to be a buyer at the 50. Right now, I'll be watching. Too big a gap to short, nowhere to lean on to be a buyer. Just like I said yesterday, who cares if I miss? I didn't trade. I told you I didn't trade in IJK. I took one long in L, and then I made some nice trades in M period. If this is your career, you shouldn't be looking to trade every time frame. You should be looking for the right trades. I have no problem watching A period form this morning. And then I guess we can go quickly to the charts. And I mean quickly. I want to keep the morning ones a little shorter. So monthly, again, we're still one time framing up. But if we take out last month's low, that would end. Weekly, they did a good thing by taking out last week's high. Now they're in danger of possibly testing last week's low. Question is, do they hold it? Do they get below it? Does it get accepted below it? Balance rules. The way they stopped at the top, maybe they stopped towards the bottom. Right? The way they shorted it up here for a while, I'm sure you'll find some buyers around last week's low. And in the daily, again, we're gapping lower. We're stopping the one-time framing up, but we're still in balance. Right? So unless we take out that 331 level and get accepted below it, well, then again, nothing's changed and we're just in an 8-day balance. Good luck trading today. Again, come check us out at camelbacktrading.org. I am live streaming all day and giving you these updates and painting a picture and giving trade ideas. Good luck. Have a great day, and we'll recap at 4 p.m.